Welcome to the Chart of Accounts in TallyPrime training from iSaral Gurukula. In this course, you'll learn how to build clean groups and ledgers that produce reliable financial reports. We'll cover groups, ledgers, and classification and give you hands-on practice so you can set up your chart of accounts correctly before entering a single voucher. Let's begin. Why does this matter? Here's the truth. Correct grouping makes every financial report trustworthy. When you enter a voucher, TallyPrime records the transaction. But the chart of accounts, the groups and ledgers you've set up, decides where that transaction appears in your reports. One wrong group can distort your gross profit, net profit, assets, liabilities, receivables, or payables. This is why we're doing this right from the start. Here's what you'll learn today. First, we'll explain the hierarchy, how groups, subgroups, and ledgers connect. Then, we'll classify accounts into the four main categories: assets, liabilities, income, and expenses. You'll see TallyPrime's predefined structure and learn when to create your own. We'll walk through creating and altering groups and ledgers, show you the multi-masters feature for faster setup, and finally, audit common classification mistakes. By the end, you'll be ready to build a clean chart of accounts. Let's define what a chart of accounts really is. It's an index, not a financial report itself. Think of it as a master list of all the accounting masters you've created in your company. It contains groups and ledgers, and its structure determines how balances roll up into your P&L and balance sheet. You can view, create, alter, classify, and review all of these from one screen. The hierarchy flows like this: company contains groups, groups contain subgroups, subgroups contain ledgers, and ledgers store the voucher entries. Every account in TallyPrime belongs to one of four buckets. First, assets, what the business owns or controls. These appear on the balance sheet. Second, liabilities, what the business owes, also on the balance sheet. Third, income, value earned during the accounting period. This goes to the profit and loss statement. Fourth, expenses, costs incurred during the period, also on the P&L. Here's the key rule. Always ask first, is it an asset, liability, income, or expense? Only after you've answered this question do you select the exact Tally Prime group. This four bucket test will save you from classification mistakes. Now, the good news. Excited. TallyPrime provides a strong foundation. Most businesses can begin with the predefined setup and add subgroups only when their reporting needs demanded. TallyPrime comes with 28 predefined groups organized into 15 primary groups, 9 for the balance sheet, and 6 for the P&L. You also get 13 subgroups and 2 predefined ledgers: cash and profit and loss account. Thoughtful. Remember, you can create additional primary groups and subgroups if you need them, but the predefined primary groups cannot be deleted. This saves you from starting from scratch. Let's look at TallyPrime's 15 primary groups. On the balance sheet side, you have 9 groups: branch or divisions, capital account, current assets, current liabilities, fixed assets, investments, loans, miscellaneous expenses as assets, and suspense account. On the profit and loss side, you have 6: sales accounts, purchase accounts, direct incomes, direct expenses, indirect incomes, and indirect expenses. Thoughtful. Here's the important thing to remember. Primary groups define where your balance ends up in the final report. Subgroups refine the analysis, but they don't change that destination. Now let's see the 13 predefined subgroups. Each one inherits its parent group's behavior. Curious. For example, bank accounts, cash in hand, deposits, loans and advances, and stock in hand all flow up to current assets. Duties and taxes, provisions, and sundry creditors roll up to current liabilities. And secured loans, unsecured loans, and bank overdraft all sit under loans as a liability. Thoughtful. Here's the rule. Create your own subgroup only when you need an extra level of detail. For instance, if you have customers in the north, south, east, and west, you might create regional subgroups under sundry debtors to track them separately. Here's the core distinction everyone needs to understand. Groups organize your accounts, but ledgers are where transactions actually happen. Curious. Think of groups as file folders. They organize similar accounts together, but rarely appear in vouchers directly. A ledger, on the other hand, is the actual file inside the folder. It stores transactions and balances, and it's always selected when you enter a voucher. Let's use an example. Sundry debtors is a group. Under it, a subgroup called Bengaluru customers might sit, and under that sits the actual ledger, a BC customer account. Pause. When you create a sales voucher, you credit the ABC customer account, not sundry debtors. Let's map real world accounts to TallyPrime groups. Thoughtful. Use the natural business meaning of the account, not the words in its name. Owner's capital is recorded in the capital account because it's the owner's contribution. Your HDFC current account is recorded under bank accounts because it's a bank balance and a current asset. Physical cash at the counter is recorded as cash in hand. A customer named ABC Limited is a trade receivable, so it belongs in sundry debtors. A supplier like XYZ Traders is a trade payable, so sundry creditors is correct. An office computer is a long-term business asset, so it's a fixed asset. Security deposits you've paid belong in deposits as an asset. Curious. And a term loan from the bank is a borrowing backed by security, so secured loans are under loans as liability. Now for income and expense accounts. Thoughtful. Remember this critical rule. Customer and supplier names never belong under sales accounts or purchase accounts. Sales GST, 18% goes to sales accounts because it's trading revenue. Purchase GST, 18% goes to purchase accounts because it's trading purchases. Freight inwards is classified as direct expenses because it's a cost to bring goods in. Factory wages also go to direct expenses because they're a direct production cost. Office rent is an administrative expense, so indirect expenses. Advertising is a selling expense and also an indirect expense. Curious. The interest you receive is indirect income because it's non-sale income. An output CGST or SGST is recorded in duties and taxes because it's a statutory tax account. Understanding direct versus indirect is crucial for profit analysis. Direct items are closely linked to making, buying, or delivering your product or service. Thoughtful. Think factory wages, freight inward, and job work charges. Direct items shape your gross profit. Calculate it this way. Sales minus purchases minus direct expenses equals gross profit. Indirect items support administration, selling, finance, or general operations. Office rent, advertising, and bank charges are indirect. These affect your net profit. Curious. Here's the complete formula. Gross profit minus indirect expenses plus indirect incomes equals net profit. If you misclassify a factory cost as indirect, your gross profit jumps and management makes wrong decisions. Classification accuracy is important. Here's a critical rule that prevents a major classification mistake. Serious customers and suppliers are party ledgers, not sales or purchase ledgers. Never place a customer under sales accounts and never place a supplier under purchase accounts. Why? Because when you do, you lose proper party analysis and bill-wise analysis. Pause. You won't be able to track what individual customers owe or what you owe individual suppliers. Instead, every customer ledger goes to sundry debtors and every supplier ledger goes to sundry creditors. This keeps your receivables and payables clear and analyzable. Let's move to the practical workflow. To open the chart of accounts in TallyPrime, press Alt+G, then navigate to Chart of Accounts and select Ledgers. Once you're there, you can switch between Ledger View and Group View by pressing F5. Curious? Press Ctrl+H to access more view options. Press F12 to configure the display and F2 to change the accounting period. Press F10 to switch to other masters. Pause. Alternatively, from the gateway of Tally, you can navigate to the chart of accounts and select ledgers. Both paths work. Choose whichever is faster for your workflow. When should you create a subgroup? Only when it improves your reporting. Here's the 5-step process. First, open the group creation screen. Alt+G, then create master, then group. Second, enter the group name and an optional alias. Third, select the correct parent group. This is crucial. The subgroup will inherit all the behavior of its parent. Fourth, check and confirm the inherited nature and all options. Fifth, save by pressing Ctrl+A. Here's a practical example. If you want to track debtors by region, Create a subgroup called Debtors South under the parent group Sundry Debtors. The balances still consolidate under current assets on your balance sheet, but now you have regional detail. Creating a ledger is where transactions are entered into the system. Here's the 6-step process. First, open the ledger creation screen. Alt+G, create master ledger. Second, enter the name and an optional alias. Third, select the correct group. Thoughtful. This is where all your classification work comes into play. Fourth, add details, mailing address, bank information, tax registration, or any other information this ledger needs. Fifth, enter the opening balance if applicable. If this ledger carried a balance from the previous period, enter it now. Sixth, save using Ctrl+A. Helpful. One helpful tip, if the required group doesn't exist when you're creating the ledger, press Alt+C in the under field and TallyPrime will let you create the group on the fly. Here's a feature that saves hours: multi-masters. From the chart of accounts, ledgers, press Alt+H and you'll see several options. Multi-create lets you build multiple ledgers on a single screen. You enter the name, the group, and the opening balance, and you can press Ctrl+I to add more details. Multi-alter lets you correct many existing ledgers at once, change parent groups, update opening balances, or add details to multiple records. And exception reports find masters that need attention. You can show unused ledgers, use spacebar to select them, and Alt+D to delete unused ones. You can also update missing GSTIN across multiple records. Save all multi-master changes with Ctrl+A. This single feature can cut your setup time in half. Now let's practice. Here's a scenario. Bright Traders is about to enter its first voucher, but it needs a chart of accounts first. Your task is to classify each of these 12 proposed ledgers under the most appropriate TallyPrime group. You have Rakesh Capital, ICICI Current Account, Cash Counter, Metro Retailers as a customer, Prime Distributors as a supplier, Sales GST 18%, Purchase GST 18%, Freight Inwards, Shop Rent, Output CGST, Furniture and Fixtures, and an unsecured loan from the director. Here's my advice. Use the 4-bucket test first. Is it an asset, liability, income, or expense? Only then select the exact predefined group. Take 5 minutes to classify all 12. We'll go through the answers on the next slide. Let's review the answers. Curious. A correct answer includes both the group and the business reason. Rakesh Capital goes to capital account, it's the owner's contribution. ICICI current account goes to bank accounts, it's a bank balance. Cash counter is cash in hand, it's physical cash. Metro Retailers, being a customer, goes to sundry debtors, that's a trade receivable. Prime Distributors, being a supplier, goes to sundry creditors, that's a trade payable. Sales GST 18% is sales accounts, that's trading revenue. Purchase GST 18% is purchase accounts, that's trading purchases. Freight inwards is a direct expense, it's a cost associated with bringing goods in. Shop rent is an indirect expense, it's an administrative cost. Output CGST is duties and taxes, it's a statutory tax. Furniture and fixtures are fixed assets, they are long-term business assets. And the unsecured loan from the director is recorded under unsecured loans, under loans as a liability. Pause. How did you do? Let's discuss 5 mistakes that quietly damage financial reports. Mistake 1. Placing a customer under sales accounts instead of sundry debtors. Fix it by moving the party ledger to sundry debtors. Mistake 2. Placing a supplier under purchase accounts instead of sundry creditors. Again, move the party ledger to its proper place. Mistake 3. Placing a factory cost, which is direct, under indirect expenses. If it affects gross profit, it must be recorded as direct expenses. Mistake 4. Putting a bank overdraft under bank accounts when it should be under bank OD account in loans as a liability. An overdraft is money you owe, not money you have. Mistake 5. Putting a daily expense under miscellaneous expenses as an asset when it should go to a revenue expense group. The common thread. Most of these happen because people didn't use the 4 bucket test first. Protect yourself. Review your chart of accounts before you enter opening balances or a single live voucher. Let's test what you've learned. Here are 5 quick questions. 1. Which group should contain a customer ledger? Is it sales accounts, sundry debtors, or current liabilities? 2. Which keyboard shortcut saves a master screen? Is it Ctrl+A, Alt+G, or F12? 3. Factory wages normally belong under which group? Direct expenses, indirect expenses, or fixed assets? 4. A bank overdraft is normally classified under bank accounts, bank OD account, or cash in hand. 5. True or false? A subgroup inherits the behavior of its parent group. Take a moment and write down your answers. We'll review them on the next slide. Here are the answers. Question 1. B. Sundry debtors. A customer represents a trade receivable. Question 2. A. Ctrl+A. Ctrl+A accepts and saves the master screen in TallyPrime. Question 3. A. Direct expenses. Factory wages influence gross profit directly. Question 4. B. Bank OD account. An overdraft is a borrowing, not a positive bank asset. Question 5. A. True. The subgroup carries the parent group's behavior and reporting destination. Encouraging. Now score yourself. 5 out of 5, you're ready to build your chart of accounts. 4 out of 5, review one concept from the course. Reassuring. 3 or below, go back and repeat the classification exercises. This isn't just about getting the right answers, it's about building the confidence to set up accounts correctly. All the content in this training comes from official Tally help sources. You have 3 resources. First, the chart of accounts in TallyPrime covering viewing, creating, altering, changing views, multi-masters, and exception reports. Curious. Second, how to use groups in TallyPrime, which covers predefined groups, group logic, creation steps, and common errors. Third, how to use ledgers in TallyPrime for predefined ledgers, creation steps, opening balances, and controls. Informative links to all 3 are available in the course materials. This content has been verified against TallyPrime 7.1. Note that menus may vary slightly depending on your release and which features you've enabled. Your final assignment is hands-on. Here's what to do. Create a practice company in TallyPrime. 2. Build 3 custom subgroups based on your business model. 3. Create 15 ledgers with correct opening balances. 4. Review both group view and ledger view to understand the structure. 5. Find one deliberate classification error in the sample data and correct it. 6. Confirm that your trial balance, P&L, and balance sheet all appear correct. This assignment reinforces everything you've learned. Remember, build your chart of accounts correctly before your first voucher. Clean masters mean fast, accurate voucher entry comes next. Thank you for joining iSaral Gurukula. You're now ready to build reliable financial foundations in TallyPrime.